All right, good morning. Let's go over today's trade plan. So in the overnight session, the S&P balanced within a range, and then once the GDP and jobless claims data was out of the way, we ended up getting a upside breakout. We were using 73.5 to 75 as support in the pre-market session, and 79 to 81 was pre-market resistance, which at this point has already been taken out. And as the written trade plan mentioned, a break above 79 to 81 confirms the buy side in control, at least in the short term, and it brings the 86 quarter to 88 quarter zone. We have a naked VPOC up there, an open gap. It brings that into play as an upside objective, and even a move up to 89.5 to 91 is very possible this morning. So at this point, short term, we're seeing overnight balance breakouts across the equity markets, Nasdaq, TF, both looking okay. And right now our focus is going to be more on the long side off the open, and that bias is going to remain bullish as long as we can hold above 79 to 81. Even if we get a slightly deeper pullback, it doesn't necessarily mean that we're going to flip our bias short term to be bearish, but ideally we want to see the S&P holding 79 to 81. That's a pretty key level at this point. And on the upside, like I said, we can target 86 quarter to 88 quarter. And since buyers are going to be in control short term, I'd rather use that zone as a profit target. Doesn't mean we can't get rotation there. If other people are also using it as a target, then the net effect could be that we get some selling short term. But with the buy side in control above 79 to 81, we will be cautious shorting the market. That doesn't mean that we won't consider shorts, but it just has to be at a time when the market is a bit overextended, heading into a resistance zone, and we're getting ideal trade location. So that means at the minimum, 86 quarter to 88 quarter, where again we're expecting some profit taking, so we could get some rotation, but it might not be like a big trade or a big move. So just keep that in mind, that if it starts balancing up at the highs, then you want to be careful. The 89.5 to 91 again is a slightly better spot. So if it happens to go through, then that's one spot you could consider. But like I said, we have to be cautious on the short side on this move up, because it can certainly pause along the way. But if there's any decent momentum behind this move, we could be testing 94 quarter, 95 quarter, or up near that area. That wouldn't be out of the question. It's certainly possible today. So on the upside, that's the scenario we have. In the event that this completely fails, which right now it doesn't look like it will, but with these markets and the volatility, and with the battle between buyers and sellers after the balance breakdown, we've seen a lot of upside moves have failed. In the event that we start trading below 79 to 81, that'll be the first sign that perhaps the market is not as strong as it looked in the pre-market session. And then if we break 73.5 to 75, that would be a big clue that now we're shifting control from buyers back to sellers, and that would bring the recent lows into play, 67 to 69, 64 to 65, and potentially even lower. But the first order of business is going to be to focus more on long setups until we see some clear signs that this breakout is not playing out the way we want, and it's turning into a false breakout. So until we see some clear signs that that's the case, I think above 79 to 81 makes sense to just be more on the long side, and be more cautious on the short side, targeting a move up to the 86 quarter to 88 quarter and 89.5 to 91. So right now, that's really the main trade idea. We don't really have any major econ reports, any market moving reports due today. We do have several econ reports tomorrow, so I don't think we're going to get a huge breakout, but with the upside moves that we got recently, to like 1800 and 97 even in the Globex session, that's really what's driving this thing where it could go a little bit higher than we'd normally expect. So, you know, again, I don't think it's going to be a big sustained move. I think eventually we will start rotating, probably closer to 89 to 91, but we want to time that short setup correctly. We don't want to just blindly fade momentum. We want to do it when it's a bit overextended, and it looks like now it's kind of running out of steam. And overall, it can still balance just within a wider range because we do have several econ reports out tomorrow. So those are really the main ideas on the day time frame. Let's see how well we hold up off the open, and we'll take it from there.